It is a Monday, the 19th of September, 2016. Time to plan out our Forex trading week. Kick buzzed. Hey, 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 hey! Welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com. We offer traders ECN accounts, fixed spread accounts, variable spread accounts. And there are strengths and weaknesses to each, and what you can do is actually pick and choose what type of trading you want to use either for. For example, maybe for scalping, you want a fixed spread. So you always know what the spread is, in particular if you're scalping news. Because in a variable spread account, the intermarket will change the spread on you. It's not the broker, it's the interbank. The interbanking system in which your trade gets passed into. The spread changes there. Well, if you like scalping the news, CPI, PPI, you don't have to just trade the big crazy ones, just the normal ones. Well, the spreads change. Well, maybe you want a fixed spread, because at least you know what it is. Then you should open up an account, put some money in it, and make it a fixed spread account and use that one just for scalping news. See what I mean? How cool is that? So on and so forth. Been trading currencies a long time. I'm here to make you a success. That is my job title and my mission statement. Hi, my name is Wayne. I'm the Chief FX Market Strategist. My job is to make you a success at trading currencies. And I bet you if I can do that, I can bring some happiness and joy to other parts of your life too. Why not? I have a simple goal. That's why I get out of bed in the morning. We do these sessions 7:30 in the morning, right before the New York Open. It's also approximately London lunch. Thanks for being part of our team and part of our community at Forex.Today. In fact, there's 25 or 30 trading ideas posted today. How awesome is that? Thank you guys. You're good, you're great, you're beautiful. You are grand. That's really exciting. And most of the analysis is pretty dang good. Look at some of these posts, they're just fantastic. Thank you for sharing. You'll see as this grows, the collaborative nature or the community nature is really something quite powerful. Because you can't see everything, you can't watch everything, and then even then you can't trade with every particular style or strategy. And yet all these posts are being shared up there. So I really appreciate that. Make sure you spend time, read them. And when you read them, ask yourself, do you agree? Do you disagree? Do you like it? Do you not like it? What would you do in this situation? How do you think that could impact something else? Trade plan, right? Look at that. Beautiful, just absolutely beautiful. Excellent. I'm going to like that. I'm going to like that all night long. Look at that. Boom. Thank you very much for your hard work. And excellent analysis. Yeah, that took a long time, right? Yeah, that's some good stuff right there. You know what that's called? Excellence. So anyways, get involved. Love it, right? Just boom. Just that is quality. So thank you for sharing. Um, and now what I like to do on Monday is look at the week, plan things out, look for our risk events and our opportunities and so on and so forth. We have a pretty boring week coming up. The Japanese market's not even open today. There's like nothing going on that I'm aware of. Just might as well take the week off. Oh, well, I guess we should probably get these RBA meeting minutes. That's coming up tonight. You know, that could be very interesting. Are they going to cut more? Are they done cutting? How's global macroeconomics doing? Are things improving or are things getting worse in China? Because remember, China is a big customer for Australia. Oh, all right. Well, all right. So why don't we just trade today and tonight, and then take the rest of the day off? Maybe just go. Oh well, we got this thing going on for Kiwi. Some housing starts for the U.S. and some economic forecasts out of Switzerland. All right. So we'll get the economic forecasts out of Switzerland. The housing data is interesting because the last one wasn't so good. So we want to make sure that we're still on trend. Kiwi news, I guess. I mean, if you're going to be here at 8:30, why wouldn't you do the 10? So we'll just trade up until Tuesday, New York, and take the rest of the week off. Well, shoot, we can't do that because the Bank of Japan on Tuesday night, aka Wednesday morning, is releasing their monetary policy statement. And remember, they've spent the last 2 months researching. I love it. Like, what are they researching? Right? Researching and doing analysis about maybe why they are nowhere even remotely close to their target. After what, 2.5 years, they're not even remotely close. And in many ways, they've gone backwards. Well, I guess they're doing their analysis to figure that out. Good for them. Here's the thing. Some people think that they're going to kill negative interest rates, but the problem is if you actually listen to what they're saying in Japan, I think that's highly unlikely. I think they're defending negative interest rates. My guess is they do absolutely, totally nothing. And what would happen to the market there? Well, when they cut interest rates to negative, I think reasonable trader and investor would have thought the yen would have weakened. But instead it got ripper strong. Dang. Oh. So if they do nothing, what does that mean? Well, if the market behaves the same way it did last time, then the opposite of cutting would be not cutting versus rising. We won't even call that, but not cutting maybe weakens. Now that doesn't make much logical sense, but except for the last time they made it more negative, it got super strong. So if they don't make it more negative, that's like the opposite of that would be maybe the yen weakens. I don't know. I mean, it's weird. It's almost like I don't get it. And if they cut further, what does that mean? Well, again, logically, you'd think that would force into risk assets. It would squeeze people out of JGBs. But the last time they made it negative, people flocked to the JGBs. So you're like, gee whiz. This is a big question mark, honestly. So I guess we got to stay all the way to midnight on Tuesday. And then we could just, I don't know, take the rest of the week off because nothing's really happening in the, well, shoot, on Wednesday, the Fed's going to have a meeting. Oh, gee whiz. I thought we were going to be able to take the whole week off. Here we are, Wednesday. We're going to hang out, get the economic projections, which is what, part of the Green Book? Interest rate decision, press conference, wowzers. So we got to stay around, trade that. Maybe I'll do a special event for that and we can all do it live. I don't know. Maybe I'll make it so you have to join the Forex.Today Facebook group or something. Force you to do that. I hate stuff like that though. Facebook.com/trade.forex.today. So anyway, so I guess we'll trade the FOMC minutes. They raise or they don't raise, and then we'll trade that for a couple hours, and then we'll take the rest of the week off because nothing's happening, right? So we'll just go along and, oh wait, now the Kiwis are gonna make an interest rate decision. Golly, can I get a day off? Guess not. Guess not. So I guess we got a full week after all. Let's review very quickly. Reserve Bank of Australia meeting minutes, super important. Bank of Japan monetary policy statement and interest rate decision, unbelievably redonkulously important. FOMC interest rate decision and press conference and policy statement, unbelievably, redonkulously important, with whipped cream and a cherry on top. RBNZ interest rate decision, well, unbelievably important. Maybe not as important as RBA, maybe not as important as BOJ, but I'm long the Kiwi. I'd love for them to say, you know what, no more cuts. That'll be free money for me. Love them cherries. Yeah. All right. And then what? Thursday, take the day off if you want. You'll be so exhausted. Friday, European PMI, European PMI, European PMI, European PMI, German PMI. Blah, 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 blah. Yeah, you'll be so exhausted Thursday and Friday. You'll just be, I don't know. Mickey miles short on the Kiwi. I understand that one too. But I've been long almost a month, so it doesn't matter to me. But if you've been short-term short on that thing since 76, makes sense to me. In fact, I set you up on it, right? So yeah, you're totally right. Absolutely. But if I can stay zero or hero, I'm okay with that too. I'm up now 13%, and I think I've only really been long 3 weeks. So I think it's going to tickle in there at about 14 to 15% for the month. By the time I collect all my swap. That's, that's interesting, right? Well, just on that money, not for the entire, not the account, just that money. Yeah, still a good month, right? Better than oh, look at that. Oh, Dukas copy, poopy diapers. Wasn't even looking at that screen. All right, so just cram-packed with unbelievably important information, and then it ends with a big old fizzle. Right, don't forget the rig count. But I think we'll be so exhausted by then. Right. So we'll probably throttle back. But, you know, who knows what's going to happen with the Fed and the BOJ? They could really they could really stir up the hornet's nest for Thursday and Friday, really, right? What if it's just like everyone is running for the exit at the same time? A stampede. A foreign exchange stampede. I've seen it before. Gee whiz. I don't cough throughout the day except here. Or maybe that's not true, but all right, well let me give you an example. I can't quite remember what it is, but I think if I go back to like 2007 or 2008, memory-wise, I can't even pull it up. It's too far back. I believe it was the S&P 500, but it might have been the Euro Yen when that correlation was super high. And I'm going from memory, but I think we waited like 6 months, but I think we had a move like this. Sorry for the complicated background, but I think we had a scenario like this. And I think 2007, the stock market came down, then we tried to rally back up, and then it made a lower low, and then it did this. And this took like 6 months or something. We waited and waited. And what do you think I did here when it did this? Took like an unbelievably long time. Maybe 6 months isn't is an exaggeration, but maybe let's say 2 months. Waited. But what was I waiting for? Yeah, the short. I can't remember if it was the S&P 500 or the yens or something like that. But we waited and waited for this, and then we sold it, right? Fired for effect. Like they say in Dubai, if one will do 10. So if you normally trade one lot, do 10 lots. But of course, you wouldn't do that. You just load and reload and reload and reload. And the whole point is, you know, what's it like when everyone's running for the exit? This thing, I think it was the pound yen at that time that I was trading, but it was falling like we were making like 1,000 pips a day for like a month. Yeah, like every day this girl was on fire, right? And you know, it'd be one of these things where you short the pound yen and you know, 15 minutes later you're knocked out with 100 pips. That kind of stuff. Right? Yeah, taxing that all night long. Yeah. And that's what it's kind of like when everyone's running for the exit. Just like everyone's like, get the heck out of here, get the heck out of the yen, get the heck into the yen. And then you get these wild snapbacks where if you know you watch it fall for 300 pips, so now you sell it, and of course then it jumps 150 pips in about 10 minutes, and you lose your shirt, right? So you know it was sort of like no rest for the wicked, or however that goes. But we killed it, but it just fell and fell and fell. Now, I think at that time I built a golf course in my backyard, and that's not a joke either. It was only 2 holes, and they were only par threes, but we had to bring in like bulldozers. Like it's not a joke. Yeah, not a joke. Had real golf flags and stuff like that. We had to. It was neat. It was sort of like a rich person's version of lawn darts. So you could take apart a pitching wedge and hit it as hard as you can. And it was also on a slope. So hitting uphill was different than hitting downhill, and you know, it was a little tougher than you think. But we had nice greens and real flags, and instead of grass, I used pea gravel. So if the ball landed on the pea gravel, it would stop like a lawn dart. If you missed, So anyways, got to choose. Yeah, so, yeah. And then we had big, long grass behind, so if you hit it too far, your ball was gone. That was just like that. So I had buckets of hundreds of golf balls. So anyways, yeah, and, you know, I had some weird yen name for the course. I can't remember what it was. But anyways, true story, all true story. And then, you know, that all fizzles out and it's gone. But it's what happens when everyone is doing the same thing for the same reason, or they don't even know why they're doing it. It's just everyone's doing it. Everyone get the, you know, buy yen, buy yen, buy yen, buy yen, buy yen, buy yen, buy yen. Okay? And I don't know if we have one of those situations or not. I don't know, but I can tell you that I don't think, the market doesn't think the Fed's going to raise interest rates September. So I'm not too, you know, I don't think a lot of people are going to buy the dollar. Maybe they do, because the next meeting for sure now, then they have to raise interest rates. But my message to you last week when we were at like 14 was to sell your Euro USD, right? And why was that? Why was that message? Well, I guess I should be looking at something over here, right? Why would we talk about that last week? Because we were at resistance, yo. So here it is. It's moved 2618. 2618 already. So now why would I be talking about dollar strength now? Yeah, because of the no-fly zone and stuff, right? That's not even, that's just the scalp from last week, right? We were up here. Or here maybe. Oh yeah, there some sort of news came out, do you remember? And I said, well, you sell it here or you sell it there. Because it's resistance. If you're a bear, you just do it, right? You guys remember now? We had some sort of news. I can't even remember what it was. It's so long ago. Retail sales, maybe? Yeah, retail sales were horrible, right? Dollar gets super weak. I'm like, great. So you buy the dollar here or you buy the dollar there. So now it's fallen hundreds of pips. Now you want to buy it? Well, it's like one of these things. Well, I don't really know now because that's happened. Now we're at support. So do you buy it now? I don't know. How will they respond if the Fed doesn't raise interest rates? Well, what'll probably happen is it'll weaken. I think that's a reasonable guess. And then someone will say, well, that means they have to raise it in December. You understand that logic? Not now, but now we know when. Versus when, we don't know. So if they don't, then now we know. It's almost sort of backward logic, right? So maybe this thing spikes. Oh my God, Fed didn't raise interest rates. Oh my God, it's the end of the world. Wait, now that means they have to do it in December. And then you buy it all back. And then you say, oh, I hate trading Forex. There's whipsaws and yeah. You're right. The market's wrong. It's the market. Yeah. Oh, it's the market's fault. Oh, it's manipulated by the central bank. Oh, my broker's hunting my stop. Yeah, where you sold at support? Mm-hmm. It's your broker's fault, dude. Yeah, selling at support all day long and you keep getting stopped out. Amazing. Just amazing. Can't be your fault. Can't be your lame trade, right? So anyways, so they're sort of like, how does this all go down? I don't know, but are you a bull or a bear? Because look at how bad this retail sales news was. You guys remember that? And you guys were telling me that other people were telling you that that meant up and everything was bad. And if it's not retail sales, then the Fed doesn't have to blah, 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 blah. Some of you guys were jacked up on other people's knowledge. And lo and behold, the other people were wrong. If you were a bear because you believe in the reserve currency of the entire planet. By the way, let me back up. I'm gonna lose my thought here, but we got to kind of connect the dots here. Last week, I was hanging out with Ryan, and I said, "Hey, did you know central banks have a bank?" He's like, "Dumbass," I said, "What?" I said, "Yeah, did you know central banks have a central bank? Central banks have to follow rules." Dumbass, I said, "What?" The BIS. So I introduced him to the BIS. Okay. And one of the things we look at right away is how much US dollars traded. It's something like a bajillion times more than even the euro. It's like way crazy. The dollar gets traded hundreds of times more than the euro or the pound. Like it's sickening, ridiculous, not even on the same planet kind of stuff. Okay? So somebody wants to buy that, obviously. Somebody cares a lot more than they care about euro. So anyways, if you think the United States is a little bit better off economically, or at least the economy is a little better off than Liechtenstein, then it goes up to resistance and you sell it. That's just your job. That's it. The complication's gone. Right? Right? Like you need to undercomplicate your life. Uh-oh. Are you trading the zloty? Polish industrial output. Big surprise. Whoa, zloty's on the move. Yeah, so anyways, what other reason may I have randomly introduced Ryan to the BIS last week? Uh-oh. Ryan may not even know this. Five, four, three, two. Oh, guess what was released today? The September BIS Quarterly Review for International Banking and Financial Market Developments. Oh my God. Hey, interesting information involved. So another opportunity for you to smarten yourself. Right? Core bond market liquidity stayed resilient through Brexit. Oh, snap. There's some good information here. Core fixed income yields under pressure. What does that mean? Somebody's buying bonds. Look at this stuff. Oh my God. You need to look at charts like that, right? Like pinup models in your mechanic's shop. Look at all this fantastic, timely information. Weak earnings expectations added to doubts about banks' outlooks. Wow. So the BIS is the regulator to central banks. Now think about it. They have very smart, very intelligent, highly educated PhDs, quantitative analysts, economists, and finance experts, and market experts, because finance is really more to do about banking and money, not necessarily securities and stuff. But so on and so forth, right? International debt securities and their trends over time and blah, 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 banks and non-banks. And they have all these people highly paid, highly skilled, US dollar dominated credit for non-banks outside the United States, right? All this stuff gets calculated and crunched and then given to you for free. Do you think it's possible that 95% of retail Forex traders have no idea what this is or that it's even there? See, look, this is the stuff I get at Harvard. I'm like, what the hell is all this stuff? Yeah, pretty good chance the 95% that lose don't even know this exists. It just came out today, right? So here's the other thing. Do you want to be the 5% that succeeds as a foreign exchange trader? Well, then maybe you want to look at 100 years of inflation to just understand where we are historically. So when someone says, "Oh well, what about the inflation?" You're like, "Well, you know what? I just downloaded from the Bureau of International Settlements that I just was reviewing a chart of 100 years worth of inflation, and even though we're at zero and stuff, compared to where we are, in World War II, World War I, things could be a heck of a lot worse. So I don't know. It gets the girls, right? So if you want to maybe join the 5% that are unbelievably, hugely successful, even if you're not a PhD in economist that can understand all of this, maybe you're the type of foreign exchange trader that downloads and skims through it anyways. And thinks about things or asks questions and say, wow, that's really interesting. Do you understand? I'm only on page 149. Debt service ratios for private non-financial sector. Debt service ratios for households. Belgium versus Finland. Oh, look at the Dutch debt ratio. That's disgusting. Hey, that's how we drink it in Bruges. But Bruges, yeah, anyways. I think I messed that up, right? Bruges is in Belgium, not in Holland. They all speak Flemish. All right, so anyways, yeah, so, quite a coincidence that, yeah, there you go, Ryan. Interesting stuff, right? So here's the thing, guys. I'm going to say it again for, I don't know, the bajillionth time, and I hope you get so sick of it that you do it. Take out like a PowerPoint slide or even just a 8.5 by 11 piece of paper out of your printer, and at the top, tell me if you're a bull or a bear on the dollar. And then under that, give me 3 bullet points why. That's it. That's it. That's all I'm asking for. And then trade it. Are you a bull or a bear on the dollar? I don't know. Oh, well, you're going to be hugely successful. I know it. You have no opinion on the reserve currency for the planet Earth. What do you think about the US dollar? I don't think anything. I don't know. I don't know. Please tell me, what's your opinion on the dollar? I don't have an opinion. I just make it up as I go, man. Every trade's unique and special in of itself. There's no rhyme or reason why. That sounds so good. Earth. Yeah, you heard it. You know Mars. Yeah, just left of that. Yeah, just be careful of all those asteroids. Just tiptoe through the asteroid belt, and yeah, it's the blue one, not the red one, the blue one. Yeah, right. Investors are throwing money at you. I like to consider myself dynamic, sir. I don't like to tie myself down with analysis and opinions. It's like chains on a wildebeest. Yeah, I just like to run with the pips. Boxes me in. It's so tight. I can't breathe. Yeah, so anyways, it sounds ridiculous, and I'm goofing for a point. If that just sounds so redonkulously stupid, make sure that's not how you're trading. Right? You understand? Rob says there are arguments on both sides of the USD. Yeah, pick one, Rob. What's your opinion? And if you go through and you're like, well, this point makes sense and that point makes sense, then that's the great thing about this is you think about it. And if you truly think it's balanced, where you're like, look, I thought about these 3 bullet points, believe all 3. Then these other ones that contradict the first 3, I also believe that is true. Then that becomes neutrality. But at least you say, you know what? My bias in the US dollar right now is actually neutral. And let me actually give you 6 reasons why. Right? Right, Rob? And then I say, you know what? That's really intelligent. I can see that you've put some thought into this, Rob. And then you say, well, conversely, however, if you look at the euro or the pound, you should say, wow, Brexit, blah, 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 blah. Or ECB, blah, 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 blah. Each one of those a bullet point. And it comes out logical and intelligent. And I say, well, here you go, Robbie. Here's some money. Trade it. Make it happen. I like your vision. Make it happen. That's all I'm asking for, right, Rob? Right? If not the dollar, then what? If you're like, well, I looked at everything and there's no opportunities, then I'll say, well, why are we having this meeting? Right? So please do that, guys. So here it is. This is what I said last week and the week before and the week before. Blah, 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 blah. If you're a bear, like you look for the next 2 levels in which you may sell. What do you want to do now? Maybe sell here. Maybe sell here. What if Brexit, or not Brexit, what if the Fed meeting comes out, they don't raise interest rates? I would assume at the beginning this thing weakens. And then if I'm a bear, I want to look for logical opportunities. Okay? And I already have this area set as resistance. Oops, come on, drawing tool. Right? I already have this area outlined. So if we just blow through the first and second one, that would make sense to me because this is short-term stuff. And all of a sudden, oh my gosh, the Fed's not going to raise interest rates. We go all the way up to the monthly resistance pivot, weekly resistance pivot, previous top price action resistance. And then what? People say, well, hey, if it ain't SEP, it's DEES. And we bring this down. Or to say it differently, someone has already made the decision. If price comes up here, I'm selling it. That's it. Someone has already made a decision. And we know amateurs don't do that, right? So who's doing that? There are people on this planet with lots of money that says that, you know, their plan, or they probably already have the orders in, if we get to here, I'm selling. I've done my analysis, my quants have crunched, my PhDs have analyzed and thought. We've done the reports. We've talked to the clients. If we get to there, we're selling it. Do you understand how we're down here, and then we're way up here, and now for the last, month and a half, we've been stuck in the middle? Why? We're waiting for the Fed meeting. If they raise interest rates, we're down here in a heartbeat. If they don't raise interest rates, we're up here in a heartbeat. And then what? Well, who knows? Depends on what they say. Right? Because let's say they raise interest rates. Then people are going to say, well, what about December? And the Fed says, we're done for a while. We want to see how the election goes, how the new presidency goes, and boom. Stuck in the middle now. My wife and family, if I die here, who'll be my role model? Who will you be my role model? Bone digger, bone digger. Roly-poly little bat-faced girl. She looks round, she sees angels in the architecture, sings, amen, hallelujah. Yeah. Everybody like Ladysmith Black? Oh, you mean Paul Simon? No. No, the African group he ripped off. Remember that? She's got diamonds. Yeah, if the one guy ever went to Africa and ripped anybody off, it was definitely Paul Simon. Yeah. So anyways, yeah. Yeah, when I was in college, I worked at a coffee shop, and I'd do the early morning opening because I had trouble waking up in the morning. I'm weird like that. So I gave myself a job where I had to wake up super early for no particular reason. In college on a Saturday, I have to get up at 4:30 or 5 a.m. And I'd open up the coffee shop and I played Ladysmith Black. I think that maybe I'm screwing up the name. It's been so long. But African acapella. It's basically Paul Simon without Paul Simon. No, back then, this was in the early 90s, James. People would come in and ask, what is an espresso? This is like around the time when in the San Francisco Bay Area, I remember the very first Starbucks that opened. We had to drive for like 45 minutes to go to a Starbucks. Earlier that year, I was in Seattle, and I went to the very first Starbucks, because back then, Starbucks actually had good coffee, and Seattle had good coffee, and it had a coffee culture. And I go to Starbucks, and it's pouring down rain, and there's a homeless woman about the age of 60, 65 in there. And she's trying to keep out of the rain. She's clearly struggling through life. And there's some young, snobby, yuppie, kind of obnoxious, hi, I'm grunge, rich kids at the Starbucks laughing at her in their, $150 grunge jeans. They're laughing at this old woman, and it's so funny to them. I can't remember what was so funny. And I'm in line for my caramel macchiato, and I see this going on, so I walk over. And I think I had a cup of coffee by then. And I sat down and I bought her a coffee, and we sat and we talked for about half an hour. And finally, the kids leave and stuff, and I'm just talking with this old woman with her hot cup of coffee, and treated her like a human being. And all of a sudden, just as I'm leaving, the staff from the Starbucks came up, and they're like, that is unbelievably kind of you. We saw it what you did, and it made a difference, we can tell. And we all chipped in our tips from our tip jar. We bought you the Starbucks coffee mug. They gave me a Starbucks coffee mug. Yeah. Still have it somewhere. It's pretty cool. I don't know how we got on that, but oh yeah, I used to work in a coffee shop. Oh my God. All right, so that's that. Have a plan, trade it, please. Okay. I haven't done everything I wanted to do yet today. Beep, beep. I don't know if you know this, but the Commitment of Traders report works. You'll be my bodyguard. I will be your long lost pal. You can call me Danny. Then if you call me up. All right. Long euro. Any significant change? Less people long euro. Huh. Less people short euro. Huh. But there's more less short? Wow, that's complicated, huh? There's a larger decrease in people that have shorted. There's a larger decrease in people shorting than there is a larger decrease in people longing. Net result is a little bit less people short, but most importantly, nobody long. That's weird. So anyways, not many people trading euro. I think that's interesting, isn't it? I can call you Denny. Denny when you call me. Look at that beauty. We got our charts back. Lovely to you, mum. Hey, this is the pig, the great big pig, the GBP. Let's take a look. Moderate, 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 moderate. I'd almost say no. I'm going to say no. No real increase in purchases of Great British Pound, but a pretty reasonable decrease in the amount of people short British Pound. Perhaps a pause after Brexit. Now, this is, remember, as of Tuesday of last week. Okay. Now, we did have a big move, right, to the downside on the pig after, I think, that Tuesday. So we'll have to see. So I would say, this isn't, I wouldn't call that more. I would call this the same longs, but less people short, aka profit taking. But another way I would look at it, and I think we've already seen it, so it's sort of a loaded piece of analysis. But if we're looking at this kind of change over time of people short, and this kind of change over time of people long, does this look like the market was much more short Great British Pound over that period of time? Well, the answer to that is yes, that's the black line. This is people more shorts than longs, right? So down, 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 down. Just recently, over the last 3 weeks, there's been a bit of profit taking. But so what I'm getting at is, if these guys made a lot of money, what's the possibility they want to do it again? Or that they maintain their bearish bias? I'd say pretty high, right? And we know last week finished pretty bearish on the pound, right? So these guys may have already reshorted. Okay? Miles says, you mean what? on this or on price? Because like from Brexit, look at this. Here's Brexit, okay? And we've had probably 21.4% retracement already. Okay. So I'd say that game's long gone. So like, did you short, let's say, okay, what are the two most obvious pivots to short on the weekly or monthly? The R1. It's the first level of resistance. You understand? Well, remember, Fibonacci is subjective. Who cares? Use something that's not subjective. Pivot points. Okay? Weekly R1, monthly R1. Great British Pound has sold heavily off of both of those. So I would argue, Miles, that they did take the shot. Just I'm looking at them right there. They're actually, see that where I'm pointing? These are weekly. It's I got to go backwards to make it go. Okay. This area here are my weekly pivot points. It's sold hard off the R1. I can see it just by glancing. Heavily sold off the R1. Right here, a little bit lower, are my monthly pivots. Also sold heavily off the R1. It already happened. This is telling you to get ready because there's a significant propensity for them to want to do it again. Okay? Your job is find the resistance if you also are a bear. See, you look at this and you say the market is heavily bearish. My job is to sell at resistance. Complicated stuff, right? So on your PowerPoint slide, you can say, I am a bear on the British pound. Bullet point number 1. Commitment of traders report shows that large institutional investors in the market for speculation are heavily net short the Great British Pound. Bullet point number 2. So on and so forth, right? You see what I mean? So that's the great big pig. Yen yen. Not much happening at all, yen yen. See? Boom, boom, boom. Up, neutral. Beep. Swissy. Okay? Once again, neutral. Beep. Boop. Aussie. Neutral, huh? Just like amazing, right? There are more bulls than bears, but it's neutral. Why? They're riding the yield, man. Like my Kiwi, just sitting on it, making money every day doing nothing. You know the difference between a rich person and a wealthy person? Rich person works really hard and makes a lot of money. Wealthy person doesn't lift a finger and makes lots of money. A wealthy person doesn't even get out of bed, but he makes money. Lots of it. What are you going to do today? What's on your agenda? I think I'll watch my accountant count my stacks of gold that I made today. Ugh. But I don't want to spend too much time. What? Whoa, Miles. A parasite on society. I thought a parasite of society is a person sitting around waiting for handouts. The rich guy doesn't have to get out of bed because he's taken his excess wealth, his excess money, and has invested it into concerns like businesses or real estate or stuff like that that improves society and multiplies its impact, in particular through banking and finance. Someone sitting around waiting for handouts does not add to GDP, does not improve productivity or expand capacity. How dare you, Miles? No. Hey, I'm opinionated. There's no doubt about it. I think I would like more people in the society to have excess capital and less people drawing down GDP. Yes, you want to get rid of scumbags, right? Okay, so there's that. So I'm sitting around here collecting my interest. Notice that we were at neutral. Here's the water line. This is me buying what I bought about, what was it, 3 weeks ago? So I bought about here. Notice it's the first pop in a while. I mean, we had one here above the water line. Okay, this is the water line, and what that means on this commitment of traders report, this is the level in which there are more bulls than bears if you're above this area. If you're below the area, there are more bulls. And what it's doing is adding up all the contracts that are long and all the contracts that are short. And there's either more people short or there's either more people long. Or every once in a while, there's exactly the same amount of people long and short, right? So if you're above this yellow area now, if you're above the water line, there's simply more bulls in the market than bears. Not by opinion, but by just adding up the contracts. Longs minus shorts, positive number. Then there's more bulls. Hey there, boo-boo. I know I'm a bear, but I'm bullish on the Kiwi dollar. Yeah. Yeah, I made a decision, right? Boo. Boo-boo. I might be a bear, but I ain't bearish on the Kiwi dollar. Whoever thought Forex would be this much fun, huh? So anyways, I'm long this sucker just as the market. Now think of that. I'm long just as the market goes long. And now I'm holding. I'm hoping we can hold it. Hold the fort, right? How do you work out the price of these CO2? I'm not sure I understand your. What you can see here is there's the net, there's price. So this darker bluish line is the Kiwi dollar. Contracts. This is the price of the Kiwi dollar. If you're looking at this, 7,225. No, it's 0.7225. That's the Kiwi dollar. Now, if you're changing the scale here, because I don't have it so it's fitting, if you're looking at numbers on this side, it's the number of contracts. Okay. If you're looking at this, this is the price of the Kiwi dollar. You are not alone. Gad, 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 giddy, giddy, gad, gad, giddy, gad, giddy, gad, giddy, giddy, gad. Gad, 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 giddy, giddy, gad, gad, gad. All right, so neutral. Slightly more bulls than bears. Not really much going on here. Some dipsy doos. Oh, I'm long, I'm short, I'm long, I'm short, I'm long, I'm short, I'm long, blah. Okay. So many of the markets are neutral. Okay. Boop. Oil has been moving. Essentially ended the week at the weekly bearish target. Do you remember how I taught you how to trade pivot points? If you're a bear, you sell in this yellow zone, right? And your target is this area here, the green zone. This is the conservative target. This is the aggressive target. Huh. That worked pretty good. Up to 46 from here, you know, this is probably going to react now to central banking policy. Just to point out too, if you're a bull on oil, this is the yellow area is the area in which you buy. Your conservative target is here. We didn't quite get there. Your more aggressive target is up there. Didn't get there, but got quite a ways up there, right? No rate hike equal oil up. I don't know. I don't know. Do they not raise interest rates because global macroeconomics looks so pathetic? Well, pathetic global macroeconomics wouldn't raise oil prices. But if you say, well, cheaper money for longer is a form of stimulus, maybe. But once again, let me repeat, if they don't raise interest rates, then that shifts a lot of people to say, well, now we know when they are going to raise interest rates. They'll say, okay, it's not September, it's December, boom. And so it's really, it's an interesting point in time. Therefore, okay, by the way, when you're in college, if your professor says therefore, you sit up and you get ready to take notes. Therefore, yeah. If you're a bear, find 2 or 3 levels of resistance in which you may consider shorting. If you're a bull, identify 2 or 3 levels of support in which you may consider buying. And if you don't know either, then what will happen is you will give your money to somebody else. You're making the decision not to decide, so what you've decided is to give your money to somebody who has decided. You watch. We got an OPEC meeting. Do you think that might impact oil prices? Miles says, no rate hike, oil up. Well, what about the OPEC meeting? Too many meetings? Did you guys see that Libya was about to deliver its first shipment of oil? And there was some sort of attack? Ed, no, I'm not going to give an advanced macro or an advanced economics class. I'm going to leave that to you. I'll point you in the right direction, Ed, and then from that, you need to do whatever needs to get done. I simply went back to university, but I've also, got, past the Series 3, for example, which means I had to study my butt off for, 6 months of my life. So, yeah, if you look at this and say this is totally powerful information, you can see it, but you just don't understand it, then come up with a strategy. Yeah, go back to university for 4 or 5 or 6 years. What's the big deal? I was talking to a friend over the weekend that I bumped into at the farmer's market, and he's like, yeah, I took a class, and it was hell. Never want to do that again. I'm like, yeah, well, welcome to my life. He said, yeah, well, how long? He said, well, how long are you done? I said, oh, 4 years. He was like, what? Yeah, 4 years and I'll be done. 4 years? I'm like, yeah. And then I'll be done. I'm going to write a book, my 6 years at Harvard. I learned a lot. So, yeah, so get involved. I mean, I'm just trying to inspire, right? If I just gave like 50 people the BIS quarterly report, and one person says, holy smokes, this is interesting stuff, then then I've done my job, right? And then maybe that person grabs that information and runs with it. But it's all out there, and it's amazing how many people just don't use it. Is anyone going to download the RBA meeting minutes today? It's only like 12 hours away from release. In 12 hours. See, like, I'm trying to tell you that these things are important. I went through it on the calendar. It's there, it's available, you need to download it. We're like 12 hours away from the RBA release. You see what I mean? Like, you should be waiting for that. It's interesting, right? It's interesting what you should know and what you should do. And will it help you immediately? I don't know. I suppose it depends on what they say. But if I asked you, are you a bull or a bear? And you said, well, Wayne, I don't really know. I said, well, did you download the meeting minutes? No. Well, I just figured out why you don't know. You see what I mean? Right? I'm like, well, you don't know what the RBA thinks. So how, right? So like, how could you possibly form an opinion that actually mattered? Because really, I don't care what you think, and you don't really care what I think. All of that is irrelevant. Right? What's relevant is you said, well, I analyzed what the members of the RBA Committee on Monetary Policy are thinking and discussing in regards to the economic data they have captured. And they're really unclear. I mean, the exports are down, housing prices are up, they're really concerned about China. And, they don't want to cut interest rates any further because they're really afraid of creating a housing bubble. So they have two masters here, and they're right in between. So they're really reluctant to cut any further. So even though global macroeconomics don't seem to be very good, they don't really believe cutting interest rates will improve exports. If anything, it could damage the domestic economy. So really, based on all these concerns and how they're managing these concerns, I'm really sort of neutral as far as further interest rate hikes, but maybe slightly bullish just because if that is a floor in interest rate cuts, it's still significantly higher than the rest of the world. And I could be long cash in Aussie and collect a higher yield than the 10-year T-note being locked into a 10-year treasury in the United States. So I might as well be long Aussie. So I'm sort of neutral to slightly bullish, only because of the positive yield on the carry. And I'll say, oh, well, gee whiz, Austin, that sounds actually pretty intelligent. And you're like, yeah, I wake up in the morning and I piss excellence. And by the way, that's a quote. That's a quote from Talladega Nights. So I'm just quoting a movie. And I'll end on one last quote. I believe it's from Gandhi. Peace on earth, may the pips be with you, may your profits be above average. I'll see you tomorrow. We'll do some technical analysis. Hey, thank you for your hard work. Thank you for being on my team. Thank you for sharing and collaborating on Forex.Today. And thank you for being a client of TradersWay. I'll see what I can do to pull some tables and chairs together, and maybe we'll trade FOMC together. Cool. Thanks, guys. See you tomorrow.